Ladies and gentlemen, thank you for the opportunity to contribute to this historic roundtable discussion on the adequate regulation of cooperative financial institutions. I bring fraternal greetings from Australia, a member state of the United Nations, and from the Business Council of Cooperatives and Mutuals, Australia's apex federation for the cooperative and mutual movement, and a proud member of the ICA. Against a backdrop of rising global inequality and conflict, this is a timely and important discussion. Cooperative financial institutions are a foundational part of building inclusive and resilient economies that work in the interests of more citizens. As businesses owned and governed by the people they serve, cooperative financial institutions provide access to financial services for marginalised communities. They support access to capital for small businesses, and they deliver affordable lending for home ownership. Their distinct purpose enables them to operate at scale while remaining anchored in the communities they serve. In Australia, cooperative financial institutions serve more than 5 million Australians, around 1 in 5 people. More broadly, cooperatives operate across the economy in sectors including agriculture, health, housing, retail, manufacturing and transport. 8 in 10 Australians are a member of at least one cooperative. Despite this reach, cooperatives often lack visibility in the market and recognition in policy. This is a pattern repeated globally. Cooperatives rely on a supportive legislative and regulatory environment to reach their full potential while remaining true to what makes them different, their cooperative identity. Apex bodies play a critical role in protecting and advocating for that identity. The lack of visibility of cooperatives has contributed to a one-size-fits-all business environment, often designed for investor-owned firms. These frameworks assume shareholder ownership, equity-based capital, and exit-driven growth, whereas cooperatives operate to benefit members, steward capital collectively, and build long-term intergenerational businesses. Protecting the cooperative identity ensures that these differences are recognised and enabled within regulatory systems. Effective sector representation plays an important role in addressing this challenge. Because protecting cooperative identity is not automatic, it requires deliberate and sustained engagement. Australia provides one example of how this challenge can be addressed in practice. Despite the scale and contribution of cooperatives in Australia, a lack of policy recognition had pushed the business model to the margins of national legislative and regulatory frameworks. Barriers to fair competition, innovation and growth emerged, particularly in access to capital. Acting on behalf of members, the BCCM coordinated an industry effort to reform legal statutes and introduce new capital instruments that did not compromise cooperative principles. In 2019, this resulted in reforms to the Corporations Act, recognising cooperatives and mutuals and enabling new capital raising pathways. This created a way for cooperatives and mutuals to access capital while preserving their ownership model. It required coordination between government, regulators and the cooperative movement, supported by an apex body, ensuring the model was understood in the policy process. It demonstrates an important point. Cooperative identity can be protected most effectively when it is clearly understood. Good policy design can build confidence in the model and improve its visibility. Since these reforms, cooperatives in Australia have become more visible in mainstream policy discussions, including in housing affordability, care services and food security. This includes recognition of the role of cooperative banks in supporting competition in financial services and improving access to essential services. The key lesson is not that cooperatives require special treatment, it is that they require fit-for-purpose regulation that recognises their structure, their purpose, and how they create value. This does not happen by default. Apex bodies provide the institutional capability to support a sustained engagement and build the evidence needed to inform policy making. This is also a forward-looking challenge. Across jurisdictions, cooperative financial institutions face a common tension: the need to scale and remain competitive while preserving the governance and member connection that defines them. The question is not simply how cooperatives grow. It is how they grow without eroding what makes them different. Protecting the cooperative identity is not about resisting change. It is about enabling cooperatives to evolve and grow while preserving the features that contribute to resilience, competition, and long-term value creation. A financial system that includes cooperatives is not just more diverse, it is more stable, more competitive, and more closely aligned to the needs of the people it serves. Through collaboration across institutions, jurisdictions, and the cooperative movement, there is an opportunity to ensure that cooperative identity is not only protected, but embedded in the future of financial systems. Thank you.